Accounting for accrued expenses takes quite a bit of work. So let's say during the current financial year we had paid total telephone expenses of $8,000. So we'd have a debit to our telephone expense ledger, and the reference there is cash at bank. We've incurred $8,000 of phone bills and they've all been paid. However, what about at the end of the year? There's another phone bill that we haven't recorded. It hasn't been paid yet, and it's for $900, and it will actually get paid next year in next year's financial period. So the problem here is we've incurred an expense, but we haven't paid it. So what we need to do on balance day is make an adjustment. So what we're going to do is record an adjustment of a liability. So we have a current liability of $900 of an accrued phone bill. There's a present obligation to pay the phone bill in the next year. It's arisen from a past event, being that the phone calls were made during the month of December 2015. And lastly, it'll result in an outflow of future economic benefits. In this case, there'll be cash that's going to get paid to the phone company. So in our balance sheet, we'll show under current assets a section or an item called accrued telephone expenses, $900. What we also need to do is increase our expense. So we've already recorded the $8,000 that we've paid. Now we better record the $900 that we've incurred but not yet paid. And that's an expense because there's been an outflow of economic benefits. We've consumed some phone calls. There'll be an increase in liabilities. In this case, the liability is called accrued telephone expenses. And there'll be an overall decrease in owner's equity. So in our income statement, we're going to need to adjust our telephone expense amount. So at the moment, what we've got is an expense showing of $8,000 because that's the amount that we have already paid. But we've also got an accrued amount here that we haven't added in yet. So what we'll do is make an adjustment and say, yes, we've got the $8,000 that we paid, but we've also accrued another $900. So really, that telephone expense amount should be $8,900. So looking at our debits and credits for all of this, we can see the old ledger for telephone expenses already has a debit here. Okay, and what we'll do is we'll need to increase that from the $8,000 that's in there already. There's actually another $900 that's been incurred but not yet paid. So that's the accrued part. So we can see now that there's a debit of $900. Well, every debit needs a credit. So what we do is we'll go and create a new ledger called accrued telephone expenses. And it's a liability, so when it increases, it'll go up on the credit side, and there we've got our matching credit. Looking at the next step is what we'll need to do is we've got our telephone expense ledger, which at the moment is $8,900. Now that's made up of two parts, so we can see there's actually two entries there. That won't go into next period. We know that revenues and expenses are closed, so we'll need to shut that down by sending it to the profit and loss summary ledger. Then we need to factor in next year. So what will happen eventually is we'll go into the next period and eventually we'll pay the old phone bill. So the phone bill for $900 plus GST that was incurred in 2015 has now been paid. And or at the same time, maybe we also paid January's phone bill for $1,000 plus $100 GST. So in total, we're going to be paying $1,900 plus $190 GST. And that's a total of $2,900, but it is actually made up of two parts. So what we need to do is record this in the cash payments journal in 2015, and we're going to need to split it up into two parts. So the first thing we'll do is put the date in, we'll put the check number, and we'll write the total amount that we're going to pay, which is $2,090. So that goes in our bank column. Now, that's actually made of two parts. It's made of, firstly, the payment for the accrued phone bill from December, so the old phone bill for $900 plus GST, and we need to factor in the payment for this period's phone bill of $1,000 plus GST. So what we'll do is, first of all, record the accrued telephone expense. That's $900 plus $90 GST. So you can see we've allocated that here in the sundries column and then filled in some GST. The other $1,000 plus GST, what we'll need to do is record that on a separate line. So we've gone telephone expenses, and what we'll do is we actually have a telephone expenses column up here. So we can use that for this payment. But notice with the accrued payment from last year, we've actually had to use the sundries ledger because that wasn't a telephone expense for this period. It was actually paying a liability. You can see there's no column there for paying accrued expenses. We've got discount revenues, creditors control, stock control, telephone expenses for this period, and then sundries and GST. So any liability payment from last period will have to go in the sundries column. It's important to note that, so looking at the one number, we've only put one number in the bank column. We haven't split it. What we've done is combined all those figures in the special columns in the sundries column into one number in bank. The GST needs to be split over two lines. So $90 attached itself to the payment of the accrued telephone expenses from last period, and $100 was relevant to the telephone expense for this period. Make sure that the repayment of an accrued expense is not entered in the telephone expenses column. That's because, like we said, it's not actually an expense for this period. It's paying off an old liability, and therefore that went in the sundries column. Just to note that we want to have that one number in the bank column. What we don't want to do, even though this might seem a little bit logical, is split that up over two lines. In previous exams, that's actually lost marks. And whilst it sort of does make sense that we would allocate 990 over the two columns there, and we would allocate 1100 over the two columns there, they actually have instructed us that that's not acceptable, and what we want to do is just have the one entry up here in the bank column for $2,090. The cash payments journal must then get posted to the general ledger, just like we always do, so we need to post each of these numbers. So first of all, we've got the $900 in the sundries column. Well, that was paying off the old liability. So we can see our reference here. It says that's paying off the accrued telephone expense liability. And here's its balance before the payment. We owe $900. Well, that's going to go because now we're going to reset that back to zero because it's been paid and we don't owe the phone company any more money. So that'll close. And that's enough on accrued expenses. We'll now need to figure out how to report on them in our next presentation.